Okay, thanks for your patience, everyone. For those of you who have joined us in the last minute or so, I was just giving it a little bit of a cushion there to allow for some time for people to show up. But let's go ahead and get started now. Just to kind of get this out of the way, answer a couple questions. One, yes, this is being recorded, and once it's done and put up on YouTube, then we will email out that link for everyone. So if you have to leave early, or if you're not able to stay for the whole thing, or connection drops or something like that, or if you just want to watch it later because it's so good, you can always have access to it and get to it another time. The slides, I'm not sure if we will have those available, but I can double check. If so, in that email that we email out with the link for the YouTube, we'll include the slide deck as well, if that is going to be shared. So, all right, well, let's go ahead and get started. Again, my name is Alex, and I'm going to be hanging out with you here for a little bit here today. And our topic for the day is tips on budgeting for your nonprofit. So let me get this up and going there. So that's me. I have been with Aplos for, this is my 7th year with the company, and I've taken on a number of roles there, but kind of my main task list usually involves just kind of helping train people. So that includes our internal staff as well as our customer base on accounting, on today's budgeting, donor management, really anything having to do with nonprofits and churches and their financials, and specifically how it relates to fund accounting and Aplos software. And for those of you who don't know what we do, we are an online accounting software and really a nonprofit software overall, because we do fund accounting, donor management, e-filing, soon to do payroll, as well as some other features coming soon as well. So that's what we do. So today we're going to talk about how nonprofits and churches create budgets, and they do it for a variety of reasons. And some of these reasons might include external and internal factors. So for those of you who are new to a budget, really what a budget is just it's kind of a forecast. It's a plan, so that as you look into the next year, 2018 in this year that we're in, you're trying to plan for how much money are we going to get, how much money we're going to spend, what's our kind of end result, and then kind of factoring that into a cash flow, which we'll take a look at here a little bit later. But again, some of the reasons you might create a budget. So the bank might require a budget prior to lending money. So maybe you've been an organization for a while, but now you want to take on some new things. And so you're going to either buy a building or take on a new initiative, and you need a loan for that. So you're going to go to the bank and ask for a loan, and they're going to ask, hey, can we get a set of financials, or can we see your budget and how you're doing compared to your budget, so that way they can gauge performance. That's kind of an external reporting need for a budget. Again, as you grow as a nonprofit, you might also have a board of directors that require a budget to ensure that you're spending money in alignment with your purpose. So you guys have set out to accomplish a very specific goal. Let's set some boundaries. Let's make sure that, what we're planning for income, we're going to get $1 million this year. Well, prove it. Why did you make that decision? Let's make sure that we're on pace with the money you expect to collect. And then for that money that we're collecting, let's kind of make a plan for how we're going to spend money as well. Because nothing is more frustrating or scary for a board to come to a meeting every month and see a red number in that net income and wonder why. So budgets kind of help you stay locked into what your plan was for the year. And that's kind of an internal reporting purpose. And then there's something that kind of crosses both lines. So you may also want a budget to just make sure that you have the resources needed to accomplish your purpose. So people externally interested, like donors or funders, granting agencies, something like that, they want to know that you're going about your purpose the right way. They want to make sure that you're being financially responsible. Your internal donors and people, kind of your constituents, might want to know that information as well. So those are some reasons to have a budget. So today we're going to walk through what a budget is. We're going to walk through how to begin developing a budget for your organization, show some tips and tricks for creating a meaningful budget, discuss how to update a budget as circumstances change during the year, which we call a rolling forecast, and then cover how to report on variances to a budget. So kind of from its genesis all the way through to how you're then going to report it during the next year. We're going to cover all of that today. And I will disclaim that a lot of this is going to be in Excel today as well. So if you're familiar with your Excel, you're going to see some things that you're probably familiar with. If you know that Excel is a program, but you've never really touched it, today is going to be a fun day for you. So just keep with us. So nonprofits focus on accountability rather than profitability. So right off the gate, the development of a budget is not necessarily to see how profitable you can be during the next year. the main goal is just to make sure that the money I have, or we have as an organization, is being stewarded properly. We're kind of checking the boxes as to, if we need to report a certain way for a grant, or we're trusted with certain money, either from donors or grants or agencies. We want to make sure that we're being financially responsible with that money. So the whole purpose is kind of more geared towards accountability rather than profitability. And this includes fund accounting. So fund accounting is it's a brand of accounting that's unique to churches, nonprofits, and government agencies, where, again, accountability kind of plays into where you have money, but you want to make sure that money is kind of set aside and stewarded for the right purpose. So that's what fund accounting does, is kind of separates those things so you can track them independently. And with this, budgeting practices within an organization mainly focus on the stewardship of those resources rather than profit margins. So think of having a specific purpose for every dollar that you receive. The more details you can build into your budget, the more helpful your budget will be. So anything that flows through or flows out of the organization, you want to have a plan for, because anything that's unplanned can scale very quickly and cause a lot of questions, both from external and internal people. So here are some common terms in budgeting, the first of which is an annual budget. So this typically refers to a 12-month period of the coming, that means that word should be coming, not coving, the fiscal year of an organization. So we're looking at 2018 pretty soon here in January. Most organizations have a fiscal year that is in line with a calendar year date range, so January through December. If you're an organization that has a different fiscal year, then your budgeting process is most likely looking at that rather than the calendar year. But the annual budget, for the most part, kind of covers that 12-month gap, and it's a kind of a set it and forget it thing, to where you develop it and you put it in place, and then you look at it, on a monthly basis. But it doesn't change during the year. You don't really need to make any adjustments or anything. It's kind of there, and you try to stay as close to it as you can. So that's an annual budget. A rolling forecast is a monthly budget that's updated at a reoccurring periodic interval. So at Aplos, we have a rolling forecast for most of all of our operations, and we review that at the close of every month. So part of our process is to update the last month with actuals, compare the actuals with the budgeted numbers, and then update the future forecasted numbers with more accurate estimates. So all that really means is we try to adapt with the seasonality and what happens during the year. So we set a budget. We most certainly set a budget, but as things happen, if let's say if we were planning on one of our departments only spending so much in personnel and office supplies and that kind of thing, but then we land a big contract or something like that, to where it kind of floods on a lot of customers, we then have to kind of scale our operations in order to meet that incoming business. That is something that a rolling forecast would allow for. So you still start with a budget, but you just kind of know that, well, we're just going to kind of allow it to be a little bit more flexible. So that way, as the year occurs, we can be responsible with that, update the numbers accordingly, and then kind of reforecast the remainder of the year. Zero-based budgeting is a methodology where you start with basically no spending and have to justify every dollar spent in order to include it in the budget. So it has to justify every single dollar that's spent with the organization. It's a lot more helpful with specific categories of expenses than using it for the entire budget. So for instance, like with us, external marketing is an area where zero-based budgeting makes a lot of sense. Again, you have to justify every dollar and kind of evaluate against other options in order for it to even be introduced into the budget. So not even looking at historical trends or anything like that, but just kind of, do we want to spend this money? What will it gain for us? So let's put it into the budget. Zero-based budgeting. And then after all of that, once you have a budget, you can do variance analysis or budget to actual. So this is saying whether it's a rolling forecast or an annual budget, static budget, no matter what kind of budget it is, we've planned for certain values as far as our cash flow and income and expenses go. Are we meeting that? So typically on a monthly basis, you look at it and say, here's our actuals, here's what actually came in and actually was spent, and how does that then compare to my budget, which we set in the previous year or even last month if you're doing kind of the rolling forecast. So then you compare it, you make decisions, you come up with reasons. Maybe it's justifiable, maybe it's seasonality, maybe it's something that you didn't foresee at all. But either way, you're looking at that typically again on a monthly basis in order to see, do we need to make a shift? Are we okay? Do we need to plan accordingly? That kind of thing. So a special kind of note, for the purposes of today, we're going to focus mainly on creating a monthly budget. So kind of forecasted out for 2018 and how that then impacts your cash flow and your balance sheet. Because you start with a certain amount of cash at the beginning of the year, And then if you forecast your income and expenses, you've got a forecasted or budgeted net income that you're hoping to achieve for the year. That will then kind of get added to or take away from that beginning cash balance. So budgeting very much kind of is interrelated with the amount of cash that you have on hand. Funds, for the most part, will be ignored today, just for the sake of time. But if you have multiple funds that you need to budget for, think of each fund budget as a miniature version of the same process. So again, as an organization, maybe you're a church, and if you have an organization-wide budget, you're saying, here's all of the income and all of the expenses we're going to spend for the entire church. If you have multiple funds in the church, let's say you have a general fund, a missions fund, and a building fund, your budget could be significantly different depending on kind of what fund you're paying attention to. So in that case, what you would do is you'd create a budget for the general fund, a budget for the missions fund, and a budget for the building fund. All three equal the master budget, but each three are kind of their own independent forecast or goal for that specific fund or purpose or project or whatever you're handling there. Okay. So what is important to have when preparing a budget? The first one is detail. So be a hoarder of information when you're going through this process. Not necessarily in life, because that's going to involve a lot of boxes and be messy, but for the purpose of creating a budget, detail is significantly important. The most important aspect of a budget is the detail supporting the budget. So typically budgets are reported as here's all of my income and expense accounts and their numbers, but then you also typically have kind of notes or reasons why you've budgeted certain ways. The more detail you can add in at the creation of a budget, the more you will understand where you spend the money for your church or nonprofit and how that spending accomplishes your mission. So when you dive into creating a budget at a very granular level, it forces you to ask meaningful questions on your spending and makes you justify the purpose of the spending. Detail also tells you where you were wrong in your estimates when preparing a variance analysis. So it kind of just it sheds a whole lot of light on what the number is, how we got there, why we think this is an appropriate number, and then, with the supporting details, if we're not achieving that number, what are some reasons why? So detail, just data, information, having all of that present is going to be helpful. The second is collaboration. So involve who's involved. So as an accountant, you probably have a really good understanding of the numbers and know how things flow through, but you might not necessarily know, why a certain department is spending the way that they do, and maybe they're justified in their actions, but you want to involve them to see, hey, what is an appropriate kind of goal for us to set for your department for the year? This depends on the size. So if you've got kind of a small operation, the people involved might be one or two people. As you have a larger organization, maybe with multiple funds and departments and funding agencies and all kinds of stuff, you might want to bring more people into the process to kind of help kind of shed some light and maybe add, again, some detail, so that way you can make the best budget for the entire scale of the organization. And then aside from just kind of the more qualitative things like collaboration and detail, there's quantitative things that's going to help as well. So financial data. So you're going to want to pull all of the relevant reports that you're going to need in forming a budget. That typically includes, and again, this might even kind of just relate to what we're doing here today, but the financial data you're going to want to pull is a balance sheet for the most recently reconciled month. So for today, we've done some prep in the Excel spreadsheet, and we kind of figured out that the last, in my kind of example organization we're going to be running through today, the last reconciled month is October, since November is still open. So we're going to run through October. So I'm going to pull a balance sheet for October 31st and use that as my kind of ending cash amount for my projections going forward. You're also going to want to pull an income statement by month for the current fiscal year. So again, kind of assuming we're talking about January through December, I'm going to pull an income statement by month, which shows me all of my income, all of my expense, and my net kind of income or loss for each month for January through October 2017. Most people will have that unless you've come into existence as an organization this year. And if possible, try to pull that income statement by month for at least one prior fiscal year, if possible. If you've got more than that, then pull that. If not, and the purpose of that is you're going to be looking back through trends and making decisions based on seasonality, that kind of thing. So if you can have prior years data available, it's going to be really helpful. If not, it's just going to be a little bit harder to kind of land the plane with some things, which we'll talk about in a little bit. But if you can, Go pull an income statement by month for the prior fiscal year as well. You can do more than that. 2 is typically fine. If you're pulling 15 years worth of income statements by month, it's probably too much information. But then again, it might just depend. But and the balance sheet for the most reconciled month, it's in there as well. So you're also going to want to pull number 4, a balance sheet as of the end of each previous fiscal year being compared. So if I went and pulled 2016's income statements by month, then I would also want the balance sheet for the beginning and ending of 2016 as well, just to kind of give a full set of where did we start, what happened in 16, where did we end, and then what's happened in 17, and where are we right now. Number 5, so any updated income and expense categories you want to use in the coming fiscal year. Your chart of accounts as an organization will change. The income and expense categories that you have this year might not be the ones you want to use next year, and you might have some lingering from years ago that you don't use today. So that is okay. All of those income and expense categories will change as your organization evolves and adapts and grows and or maybe shrinks. So if you already know that in the next year, we want to kind of maybe reorganize some things or introduce a category that we don't have now, or vice versa, take one out, bring those changes along with this budgeting process as well. It's also possible that you get to those decisions based on what you end up doing while you're doing the budgeting process. So just keep that in mind. And then the last one is any other considerations to factor into the budget. So do you have any grant guidelines? Do you have any ways of spending money that you need to keep track specifically of to stay within the guidelines of a grant? Do you have any projects or designations that the board wants you to keep track of? Do you have any cash flow needs? Do you need to have a certain amount of money on hand at any given time as a buffer for like a bank account or something? That's going to be important to know. And then any obligations, so any debt. Do you owe anybody money? Are you planning on owing anybody money? Do you have any sort of things that are coming to collection this year? That kind of stuff. Just try to, again, collect as much data, financial data, as you can before starting that process. So in all of this, Excel is going to be your best friend. Again, there are, from the spectrum of knowing that Excel is a program on my computer, I'm pretty sure, to being an absolute like wizard that you just kind of dump into the matrix like Neo, and then you can kind of see numbers just floating around you. I'm probably like a 3 in that scale. So this kind of stuff is going to be helpful. I will know how to do a decent amount in Excel, and really what we're going to be covering today is maybe easy to moderate types of functions. So I won't try to go crazy, but try to be at kind of a level that is familiar for people that are familiar, but also easy to understand for those of you who maybe don't feel comfortable in Excel. But Excel is an extremely powerful tool. What it does is it basically creates your data into a grid format to where then you can filter, you can search, you can sum, you can average, you can do all kinds of kind of data manipulation in order to get to very specific numbers and variances and that kinds of thing. It really is just kind of it's a huge just sandbox. You can do all kinds of stuff in Excel. So if you're not comfortable in Excel, now is kind of a great time to start, even if it's basic, even if it's, this minus this equals this, even putting in basic calculations into Excel is going to begin to make you feel a lot more comfortable there. So maybe next year you can, go crazy with it. But yeah, so I'll do my best to explain things as we go. We've kind of already done a lot of the pre-work so that we're not doing everything here today in the hour that we have. But it's also possible that you're going to look at what I've done and go, oh, that's cute. Way to go on your program, but don't rub it in. I'm sensitive about it. So let's take a look at Excel. So I'm going to minimize this and just make sure that we're not, okay, no current questions. Great. Okie dokie. So let's minimize that and get the Excel open. Okay, so back to our list of things to grab. And maybe real quick, we do have a couple of polls that we want to do. So let's take a quick little break and do a couple of these polls. I'm going to launch one. You should see it pop up on your screen. And if you can just give me a quick answer, we'll give it about 30 seconds for each one. We'll go through a couple of these real quick. So let me launch the first one here. So the first one is, have you ever created a budget for your organization? Select one of the following. Yes, but I'm not sure I did it correctly, or no, this is new to me. So feel free to answer that. All right, just give that another couple seconds here. 4, 3, 2, 1. All right, close. All right, not sure if you can see the results, but 90% of you voted, so 10% of you wake up, hey, we're still here. 60% of those who answered said yes. So most people are familiar with the budgeting process in some form or fashion. 14% said yes, but I'm not sure I did it correctly, so that's great. And then 2, no, this is all new to me, so great. Let's do one more. Question is, do you feel comfortable creating or adjusting the budget for your organization? One of the following: yes, I have lots of experience. Yes, I just know the basics. Not sure. No, but I can manage. Or no, it would be a train wreck. I was looking at these stats. I was waiting for the percentage to pop up on no, it would be a train wreck, and it finally did. So thank you, whoever that was, for being honest. Give that another 5 seconds or so. Alrighty. Okay, so do you feel comfortable? 32% said yes, I have a lot of experience. Great, welcome. 47 yes, but I just know the basics. Hopefully today is helpful for you then. 8% not sure, 12% no, but I think I can manage the basics. And then 1% no, it would be a train wreck. So it doesn't tell me any names, so I'm not going to single you out, whoever you were, but thank you for your honesty. I know how that goes. So, all right. So let's get into the Excel portion. So everybody can see the Excel. It looks like it says it's too small to read, so I'm going to maximize that real quick here. So let me get this blown up a little bit. Okay, so like we were talking about in the slide deck there, you're going to want to pull information. So what I've done previous to us meeting here today is I've pulled some basic data for an organization that I am the treasurer of, actually here in Fresno, California, called Central Valley Justice Coalition. We are an organization that provides information and training and awareness about human trafficking and other kind of social justice issues in the Central Valley. We've been officially in existence as a 501c3 for 2 years. And actually, this has been helpful because we actually do need to create our budget for 2018. So this has kind of been a very convenient process for me. So what I've done is I've gone to Aplos and I've pulled a couple of reports, one of which being a balance sheet as of the most recently reconciled date in Aplos that we have available. So that is December 31st. So this is our October 31st balance sheet. Here's how much we had in cash, and then these variances are known, and then here's kind of our fund breakdown. So kind of peel back the curtain a little bit there. I've also pulled an income statement by month for the past couple of years. So here is our income statement by month. Hopefully that's getting big enough for you. Here's 2016. So here is January all the way through December, all of our income categories, all of our amounts there, and then all of our expense categories and our expense amounts there, leading all the way down to our net income for each month as it was in 2016, with our net kind of annual down here at the bottom right. I've also done the same report for 2017, but this one's only through October since that's the most recently reconciled month. So again, let me make that a little bit larger there. So I've gotten all of this data. So whatever accounting system that you use, Aplos makes it pretty easy to pull a report and export it into Excel, and that's what I've done here. So what I would recommend is pull all of that financial data and make a separate sheet in Excel for each one of the separate reports. So you can see here I've got my balance sheet as of 10/31, my income statement by month for 16, same one for 17. And then if you have multiple years worth of data, you can put them in different sheets down here at the bottom. And what I would recommend is keep these untouched. So leave them as they were. Don't mess with any of their numbers. Don't do any formatting to these. Leave these as reference points. So that way, if you like I've done a number of times, gotten halfway through something and thought, oh, I probably should have done that differently about 15 steps ago. You can kind of reboot and pull the information back in. Or if you just wanted to go back and see how it was originally presented, you can go back and get those numbers as well. So leave these relatively untouched. And then what I did for just formatting's sake is I put kind of a stopgap here sheet, just a blank sheet with a different color, which if you right click on the sheet, you can change the color of it just as a kind of a barrier between what I'm currently working on and then what is kind of an original file, if you will. All right. So I've got two spreadsheets here working. The first one is a 2018 working budget. So this is what I've begun to kind of work through for our 2018 numbers. And then I've got a 2018 working cash flow. And this is the one where there's not been anything necessarily done too much here, but this is eventually going to tell me, once I've developed my budget and gotten to what my projected net income is per month, I can then factor that into my cash flow, and my starting date, being the end of October. I can kind of play that out across each of the months that I'm playing with here to then hopefully, as of the end of December, show me what our projected cash flow should be for the end of 2018. Okay. So before we get too much into the nitty gritty, the whole kind of point of this process here is to develop good projections for each income and expense category that you have. So if you're already using an accounting system, or even if it's basic, even if you're just keeping track of stuff in Excel or paper, you still have a pretty rough idea of what you're spending your money on and how you're receiving your money. How you receive your money is your income accounts. So these are going to be these categories here. Each kind of category representing a different way that I'm going to be receiving money. So we get donations from people. We've kind of got that split out by all donations versus monthly donations. We don't really use that a ton, but it's there. One-time gifts, matching grants, coffee sales, miscellaneous sales, reimbursements, and then we've got some new categories that we've introduced in 17 as well. But again, kind of the idea is you're trying to develop a plan, right, for how you're going to receive and spend your money. So break these into applicable categories, ones that make sense for your organization. I wouldn't necessarily recommend finding a chart of accounts online and just kind of copying and pasting it, maybe as a guideline as to what kinds of categories to create. But your chart of accounts, your income and expense categories are going to be very specific to what you do as an organization and what your board or reporting agencies want to see. So figure out what categories work for you, put them in here. And again, the point of this is to develop good projections for each one of these categories. So that kind of starts with desired income and expenses. So again, your chart of accounts. That then goes into fixed versus variable costs. The difference between those is a fixed cost is something that doesn't change. You kind of set it and it just kind of reoccurs. Meaning like rent or something. If you rent a spot for your office, then you might have a rent that's $500 a month, and unless something happens, it's going to stay the same. That's a fixed cost. A variable cost is something that scales with activity. So that's where, like, if for instance, if we're going to spend money on buying swag, stuff we all get. Coffee mugs, t-shirts, pamphlets, that kind of thing. That is typically going to scale depending on how much we end up doing throughout the year, event-wise. So the more kind of events and projects that we do, the more stuff we're going to want to have on hand to give out. So that's an example of a variable cost. Variable cost can even be salaries, depending on how much you pay people. If they're hourly employees, you can have variable costs with compensation. You can have variable costs with utilities and that kind of thing. So again, think of fixed as stuff that is just kind of stagnant, or at least very, very steady. Variable kind of shifts with activity. The point also is to create trends and ratios and projections, things that you're going to want to factor in. Basically, you're looking at all this data in order to kind of forecast what your next year needs to be. So by looking at what your fixed costs and variable costs are, what are kind of healthy ratios to establish. So maybe we're trying to aim for only 40% of our spending budget to be salaries, that kind of thing. That's important to know. You also want to kind of look ahead and see, do you plan to open up a new funding source? Are you planning on getting a grant this year that you didn't last year or something like that? Are you planning on hiring anybody, anything like that? All of those kinds of things you're kind of trying to factor into these numbers as you get going. So point of the whole process, develop good projections for income and expense. And another point of this whole kind of thing is to blend it then into cash flow. So once you've gotten to what are some good numbers, how does that then factor into my cash flow? How does that kind of forecast what we're going to end the year with? Now, something else that we're going to take a look at here a little bit today is things that are non-income and non-expense and how they factor into cash flow. So income and expenses will cover most of your bases. But in accounting, there are some things that you spend your cash on that do not hit one of these categories. Namely, debt payments, mortgage payments, any outstanding payables or receivables that you have at year end. If you sell a fixed asset or inventory, something that you have already kind of on your balance sheet as a possession, or if you buy equipment, those kinds of things typically don't hit an expense account or an income account. So there's kind of another factor here where you're projecting how much you're going to receive based on income and new money coming in. Here's how much you plan to spend on money going out towards your different kind of expense categories here. And then if you have any of those kind of non-cash, not non-cash, kind of some of those non-income or expense type things, you also want to start to factor those in. So I'm going to add those just as notes down here. So I'm going to put in debt payments, outstanding AP and AR, mortgage, sale of equipment. There's no spell check in Excel, so have fun with that. Inventory, and then I'll do equipment purchases. Just put those in there as well. Okay, so these again are kind of non-income, non-expense things that will impact my cash flow. So we're going to need to factor that in. So again, kind of the point of this then is to develop good projections for income and expenses, blend that into a cash flow, and then adjust as needed. So this whole budgeting process, if you're expecting to sit down and take away 2 hours out of your day and get it done, you might be able to, but chances are this is going to be a process. This is going to be something that, especially if you need to involve multiple people, you might start today, but it's going to be something that takes you into, hopefully by the end of the year you have it done, but maybe up until January to have a good plan as to now how the next year is going to work. So take the time if you can. Excel, again, is a very kind of fun place to work in once you understand what you're doing. So feel free to tweak the numbers. You might plan for one thing and go, that doesn't necessarily seem right. So maybe what's some other ways I can look at the data here and maybe change the projection in order to get it to be different. So feel free to take some time, play with it. You might also change your chart of accounts depending on what you find. So just feel free to kind of sink into it and really make this a process so that you understand it better rather than just trying to plug in numbers that results in a net income. Okay, so where do we start? So in Excel, you're going to want to copy all that stuff into different sheets like we have down here. So these are all my kind of current relevant reports. You're going to want to create that buffer to separate what is an original file versus a working file. You're going to want to create a sheet, and that is a copy and paste of the oldest income statement by month that you're working with. So that's what I've done here. So what I did is I basically took this income statement by month and I copied it into a new sheet, and that's what's given me my categories here for January through December of 2016. So as of 16, these were all my numbers, and I've copied them all here. I verified that the amounts were all working down here, which kind of as a quick little Excel tutorial here, if you enter equals and say sum, and then find sum and tab or press enter, however your Excel works, and then start to highlight cells above it, it will sum all of the numbers that you just put in. So there's that. So I verified that that sum was matching my income statement by month for the same kind of period of time, January, and all of my income. So these all match, so I know that this file now works for my 2016 year. What I then did is I added the other income statements by month to the same report. So from here to here is January 16. From here to here is my year-to-date 2017. So that is those numbers there. So I kind of merged everything together. Now, these are going to change a little bit. So as you notice that there are some categories that I used in 17, but not in 16. So I had to factor those in. I had to kind of increase the list here. So that way in one sheet, I'm looking at all potential income and all potential expenses that are kind of factored in, and then where their numbers kind of drop off. So these categories were used in 16, and then in 17 we added some more expense categories here, which have continued through to October. So if you have some of those kind of new income or expense categories that you want to factor into 18, it would be good to add them into the list here, which if you select the row, if you click the little row here, and then up here it says insert, it'll insert a blank line up above there. You can also do the same thing with delete. If you're a keyboard warrior and you're on a Mac, I don't know how to do it on Windows, but you can do a keystroke to be Shift Command plus, and that will plus and minus some things in there like that. So that's where you can add some of those new categories. So those new categories won't have anything for 16 or 17, but as you start to factor in 18, they'll be down here at the bottom. And then I've also inserted some other kind of summing here at the end. So what I did was I entered in kind of some date ranges. So where the months are up here at the top, and then I've added in some months beginning and ending up here. So the years, excuse me, beginning and ending. So this formula then is kind of a sum of, if all this criteria is present here and it's in between these dates, then sum the numbers. And again, this is probably some of that stuff that, if we had more time, we would jump more on, but these kinds of formulas will then begin to allow you to sum things and say, here's my 16 data, here's my 17 data, and here's my now projected 18 data. And then you can start to run variances on, okay, what is this year over this year, and what's my 17 over 18, kind of what's my goal here, what's the percentage variance. So again, you're looking for trends, you're looking for basically healthy kind of numbers that not just, hey, we did 20,000 this year, let's shoot for 25 next, because, well, maybe 25 is a huge goal. How have we done? What's our activity been like? Do we have a lot of new donors factored in? What are some kind of healthy goals for us to cover? So once you've kind of combined everything, the formatting then kind of takes into play. So here's where then those summing kind of totals come in. So once you've combined the years, you're going to want to have the summing all kind of taking place here. So I'm summing all of the income down here. I'm summing the bottoms for the expenses. And then I've got a net income playing in here as well, which is my total income up here minus my total expenses. So that's giving me my net number per month for all of those periods covered. I've also changed the font color to be red if it's negative, green if it's positive, just for a quick kind of Christmassy look to your budget. And then what I've also done is I've made the color of the text for the 2 months left in this year to be orange, telling me that it's an estimate. Those months haven't happened yet, or if they have, it's partial data, so the month hasn't closed just yet. So I'm going to kind of factor these in, and then that will give me a kind of an ending actuals to look at for 2017, and that will help me then kind of plan again for 2018. So that's where it becomes a little bit limited, to where these numbers here for November and December of 17, I got these based on 2016's activity, just knowing that in December and November, we typically scale up a little bit from where we were the months prior, and just kind of looking at an average then, I came up with these numbers just as plugs based on the percentages. So that's the kind of stuff where if you have multiple years worth of stuff to look at, then it's helpful because you can begin to look at trends, you can look at seasonality. I know that in the last 2 months of the year, we have a big kind of giving campaign. We do a couple of events. So the giving, the average is not necessarily going to be the case, to where our average here through July was 7,400, but I know that it's going to be a lot higher in these kind of final months. So I then looked back to 2016 to tell me what can I expect in these months. So that again gave me kind of estimates as to what to expect for income and expenses for the remainder of the year. So these will help me play out 18. Okay. So first, again, step is get everything into one Excel file. 2, do some formatting. So start to pull in numbers and put them side by side and start to compare, start to play with summing and variances, or excuse me, percentages and different relationships that you can plug in with just basic formulas. And then really at this point, you're kind of off to the races with playing. So this at a certain point now kind of consolidates everything into one spot. So now you can mess with stuff. So now I can look at things like, let's see, what's this number here? So what I did is this income here, our giving, I know trends up towards the end of the year. So that's how I got bigger numbers for November and December based on 15% and 8% kind of in the prior year. The other stuff here is more of an average. So I want to look at, okay, well, coffee sales and, these workshops and things that we do are typically a little bit more common, where they just kind of click along throughout the year. So what's my average? So I entered a formula to say equals the average of the stuff that I select here. So I'm going to go back to January. So just tell me, what was the average? So what was our average for the year? And then I plugged that in just as a placeholder for November and December. So put those numbers in there. So now I can begin to look at 18. So same kind of thing. I could very easily look at what's my average for 2017 for this line item. My average per month was $23 dollars and some cents. So then if I wanted to just kind of play out that average throughout the remainder of the year, let's do 23, and just say on average we're going to get that per month. Then what that's going to do is start plugging in those numbers. These formulas are calculating what those numbers are, the sum again, and it's also bringing me to a total 2018 budget line item over here on the very right. So that way I look at it and go, you know what, 278 might be a little high. Let's plan for maybe just 200. And maybe you just kind of override that and put in, not 2,000, 200. And then that updates all your numbers. So that kind of thing, this is where the playing comes into play, to where you've got all the data present in one spot. And so now you want to go through and start to calculate these things and see where it results. All right. So let me get rid of that and put my formula back in there. So let's just say that I've got this all kind of figured out here. Let's do, what's an average here for 2018? Actually, let's just do a projected kind of net income down here. So let's say net income wise, I'm going to plan for an average of $2,500 per month. So I'm going to just plug those in there like that. Expand those so I can see the amounts. And what this is doing, I previously kind of went through and added these formulas, but what this is doing is it's looking at my cash flow and thinking that with January factored in, let's make that the same kind of purpley color here. It's running a formula to basically say, we started this with this much as of the end of October. With my projected ending of November, that projected net income is going to be $8,200. So what it's doing is it's taking that value and it's adding it to where I'm saying I ended with October. So it's giving me a new kind of ending cash flow projection for November. And then with December, then all the way through 18. So that's where at the end of this day, if you get through the budget, you create all your numbers, you've got projected net income and cash kind of coming in and out for each month for the entire year, then you can plug something like this in to say, okay, well, if this budget works and we're starting with this much cash and we do how we thought we were going to do in November and December, then kind of all things considered, we should be able to end the 2018 year with $77,190.55, which then you could say, what's that minus where we started, like that, and say we plan to basically gain over the next 14 months almost 40 grand. So that's the kind of stuff you can begin to play with in Excel. And I really wish we had a lot more time to go through some more specific examples on the Excel stuff, but hopefully this has been helpful to kind of paint a picture as to how this can begin to play out in Excel and the power of Excel. And really, Google is going to be your best friend with Excel as well. There's a ton of resources out there. So you can Google something like, how do I sum things together? How do I average? How do I input a date? We've even got formulas running up here for just entering the next month, the ending date of the next month to the left of this thing. There's formulas that you can do for almost anything you want in Excel. So play with it, do what you can, push the boundaries a little bit, Google things that you don't understand, and hopefully that can get you to where you're starting to get some healthy numbers here for your 2018 budget. Okay. All right, so let's go back to our presentation here for a little bit before we end. So here's the thing, and real quick, I'm going to launch one more poll here. Let's see. Here we go. Launch. Question is, what is your current accounting software? Applos, QuickBooks Online or Desktop, Blackbaud, Excel, or other? Alrighty. Give that another 5 seconds or so. Let me take a drink of coffee. Alrighty. What is your current accounting software? 24% said Applos. Hey, welcome. You've probably heard my voice at another time. 36% QuickBooks Online or Desktop. 1% Blackbaud. Sorry, Blackbaud. 11% Excel, or 28% other. Great. Let's do the last one. This is the last poll for the day. What is your annual revenue? Budgeting needs to be very based on organization size. So this helps us kind of tailor our recommendation. One of the following: under 100,000, 100 to 500,000, 500 to a million, 1 million to 5, and then over 5 million. Alrighty, going to close in a few seconds here. Okie dokie. So what is your annual revenue? 35% under 100,000, 26% 100,000 to 500,000, 9% 500,000 to a million, 25% 1 million to 5 million, 6% over 5 million. Fantastic. Thank you. Okay, let's go through the last couple bits of this. So once you've created a budget and gone through all that process, and you now have a 2018 budget, you can then take that budget and go to your accounting software and put it in. So that's step one there. So put your new budget into your accounting software. And I put a little note here to say make sure to account for month variability. And what I mean by that is when you create your budget, you notice that I had everything kind of broken out into column per month. You won't always just take an amount and divide it by 12 and have that be an accurate number, because maybe during some months you know you're going to do more activity. Like for instance, like an insurance payment, you might make that once a year, and that might be in like March. So if you take the full amount and then budget it equally across all 12 months, that's going to then look like you're under budget 11 months out of the year and then way over budget 1 month out of the year. So that's where most accounting softwares can allow you to budget on a monthly basis. So you can be kind of more honest to what's going to occur in each month. Aplos allows you to enter income and expenses for the budget. You can even budget into further detail by fund or tag. So again, kind of based on if your organization has multiple funds, or a tag can be used to track like a project or an event or something like that. You can even kind of detail into a more further granular budget that way. And then reporting on a budget, a good practice is to review the budget reports on a monthly basis along with your other financial statements. So types of budget reports, you've got a year to date. So that's where what it will do is, let's say you're in March and it's January through December. So in March, you run a year to date report, and it's going to show you here is your actuals in Q1. So here's everything January through March. Also, here is your budget totals for that quarter as well. So it's not, you could add your annual budget to that report as well, but typically it's going to show you what's the total kind of budgeted amount for those categories in those 3 months. So it's going to tell you not necessarily a month, but a year to date figure on how are you doing your actuals compared to with your plan or your budget. You can also do a current month versus last month. So what's March compared with February? How did we do? What's current month versus last year? So that's saying, what is my February this year compared to my February last year? Or you can even do current month versus year to date, to where it's what's my June compared with how I'm doing for the year. So that's where we did kind of a mid-year look this year and did kind of a current month versus year to date thing, where it was here's kind of our health, and here's where we're over and under budget for the year, and then how we're doing this particular month. You can also run comparative to last fiscal year period, if possible or applicable as well. So again, kind of along the same lines, you could, in some programs, you can say, what's my Q1 in 18 versus my Q1 in 17? And kind of, if you typically do kind of the same things per year, you can kind of quickly get to, did we stay in line? Did we perform as expected? How do we do compared to last year? That kind of stuff. So what are you looking for when you report on a budget? You're looking for, are you meeting your income and expense goals? You spent all kinds of time and collaborated with a bunch of people to come up with goals. So are you meeting those goals? Are you also meeting your cash flow projections? So if you factored in your net income and you're meeting your kind of goal as your net income, then do you have as much cash as you said you're going to? If not, why? It could be that maybe there was a transaction that flowed through that missed your income and expenses, like you sold property or something like that. That might, or a portion of it might miss your expense categories, but increase your cash. Are you over or under on either of those? What is your variances? Are they accurate? Are they reasonable? You might look at a variance and go, yep, okay, we expected that. this type of thing happened, so that's why we didn't hit that goal, or that's why we really exceeded that goal, something like that. And then do budget totals need to be adjusted to reflect anything? So again, kind of that rolling forecast is stuff happening throughout the year that you need to then kind of factor into your remaining budget for whatever period or year that you're budgeting for. All right. So today we've kind of skipped a rock over a lot of things. We've walked through what a budget is, worked through how to begin developing that budget for your organization, showed some tips and tricks for creating a meaningful budget, specifically in Excel, how to update a budget as circumstances change throughout the year, a rolling forecast, and then showed how to, or kind of what you're looking for when you're reporting on variances to your budget. So our kind of shameless plug is something that we do at the end of most webinars, which is kind of this is put on by Aplos, so I have no problem just marketing Aplos throughout the entire thing. But, I mentioned it a few times, but really kind of as it boils down is we focus on software that's geared towards nonprofits and churches. So if you're a nonprofit or a church and you're using another system, which, our poll told us you were, if it doesn't do fund accounting, that might be something that you want to consider. And we also do donations tracking. So we kind of want to be that kind of one-stop shop for all of your software needs for churches and nonprofits. So yeah, we can help with that. So let's maybe go through some questions. I know we have about like 5 minutes, and we kind of used a lot of our time here today. Again, I'll kind of skip a rock through kind of the common questions. Yes, this webinar was recorded. We will send it to you once it's available online. And the slide deck, I'm not sure if we keep a copy of that or distribute a copy of that, but if so, that will go along with the email that we send with the YouTube link as well. So there's that. Okay, so first question here, I'm confused. Why are you using Excel rather than Aplos to do your budgeting? I don't know Excel well, and I'm hoping to skip that step by using your software. It's a great question. So accounting software is typically not where you want to develop a budget. Reason being is, as you saw, my spreadsheet had all kinds of stuff factored into it. If you're making simple decisions like, let's just increase our income goal by 10% this year and keep our expenses the same. That's a super easy way to do a budget, and it's not necessarily wrong either, just depending on the size of your organization. So if that's the case, you can run a report in Aplos. What's my total income? Increase it by 10%, and then plug those numbers in. What are my expenses for this year? Let's put in the same numbers and just shoot for that. Super easy way to do a budget. But if you have to do comparative reporting, if you want to look at ratios and averages and sums and this versus last, I mean, Excel is just kind of that, again, kind of open sandbox place where you can go and just run all of those kind of calculations. So typically accounting softwares are not built for that kind of budget development, although they will hold the budget once you've come up with the numbers. Hopefully that helps. Let's see, can you highlight one of the percentage cells in working budget? Sure, and you know what, I can even, I think what we're going to try to do is make kind of a templated version of what I showed you here for the budget. So that way, if you want just kind of something to plug numbers into, you can. So I'll see if we can work on that, but let me know if that helps there. How do you enter a budget into Aplos? If you're in Aplos and then click on accounting and then accounts and then budget, you can then put in what year you're budgeting for. So you can type in 2018 and say start budget or enter budget. And then that'll bring you to a screen which lists all of your income and expense categories and then an open field for you to put in those numbers. What version of Excel am I using? That's a great question. I'm on a Mac, so I am using the version, what is this? 15.34 parentheses 170515 and parentheses. That it's, I think it's the 2000, I don't even know. It's the newest version, whatever that is, 2016, I think. Let's see here. Let me get back to my questions here. Where'd you go? Okay. Let's see. New users to Aplos, are these reports accessible in the standard package? Yes, all reports are accessible in every package of Aplos. The only caveat is if you have a feature that is exclusive to one of the higher packages, like budgeting by fund, those fund budgets will only be available if you can budget by fund. But income statement by month, balance sheet, income statement, variance analysis, all that kind of stuff is in every package of Aplos. What's the difference between cash flow projection and income projection? Income or net income projection factors in your income and expense accounts. There might be things that bypass your income and expense accounts, like sale of property or purchase of equipment or payment of debt. Those types of things will impact your cash flow, but will not show up on an income statement. So that's kind of the difference between those two. Can I tag budgets with the standard package? Yes. There are tags in the standard package, but there is not budgeting by tag in the standard package. That is a more advanced feature, which we can get you some more information on, Angelique. Let's see, if you have separate departments, budgets for departments or project managers, how do you track that in Aplos? Can you send them a report at the end of each month? Yes, there are ways to set up budgets by fund and by tag. And then if you have access to that, you also have kind of what we call a custom report manager, to where if I'm the head of a certain department and that department's a tag and you've budgeted for that tag, you can allow me to have access only to that particular tag's reports in Aplos. So good question. There's a lot more information that comes along with that, but Jan, we might be able to get you some more data there. Does Aplos provide payroll services? We don't in-house, but we are working on a partnership with Gusto, which should be released in the next month or two. And I do want to be sensitive to everybody's time. So it is 11 o'clock Pacific time. Our webinar has kind of expired. So what we're going to do here is I'm going to download the rest of these questions. We'll write up answers to them and send you responses probably by the end of tomorrow. So I appreciate you guys taking the time. I know today was a lot of information. Hopefully it was helpful. But if you have any follow-up questions, feel free to email support@aplos.com. Or if you have any questions on maybe some of our more advanced features, then email sales@aplos.com. You can also visit our website, aplos.com, and run through any data that's on the website as well. And we will be sure to get you that YouTube link and maybe slide deck and maybe Excel spreadsheet as well, hopefully by the end of tomorrow. Okay. Thank you again for taking the time. And my name is Alex. It's been fun hanging out, and let us know if you have any more questions. Talk to you soon.